You did it. You closed on your home. The escrow officer called, the deed recorded, and your agent, I, handed you the keys. And now you're standing there thinking, okay, now what? Because nobody tells you what happens after closing. Everyone talks about finding the home, making the offer, getting through escrow, but the moment you get those keys, you're kind of on your own until today, because that's exactly what this video is about. Hi everyone, I'm Rosi Agopian, real estate broker with Beverly & Company Luxury Properties, serving West Hills, Woodland Hills, Calabasas, and the entire valley, the San Fernando Valley, and anywhere. Welcome back to my first time home buyer series. And this is part 5. If you haven't watched part 1 through part 4, I'll link them all below. We've covered everything from getting pre-approved to writing a winning offer to the full escrow process. Today we're talking about what happens the moment you close and everything you need to take care of in the first 30 days of homeownership. Let's get into it. Number 1, the day you get your keys. First, take a moment and celebrate. You just did something incredible. Buying a home is one of the biggest financial decisions of your life, and you made it happen. So before anything else, be proud of yourself. Okay, now let's get to work. The day you get your keys, there are a few things I always recommend doing immediately. First, number 1, change the locks. This is the very first thing. You have no idea how many people have keys to that home. Previous owners, neighbors, housekeepers, contractors. Do it day 1. And here's a little tip. Check your home warranty. Some home warranty plans actually cover the cost of rekeying your locks when you first move in. So before you pay out of pocket, pull out your warranty documents and check. It could save you $100, $200 right off the bat. Number 2, setting up your utilities. Before you even move your furniture in, you need to get your utilities transferred into your name. Here's everything you need to set up. Electricity and gas in the West Hills, Woodland Hills, Calabasas, and San Fernando Valley area. Your providers are typically Los Angeles Department of Water and Power. For electricity, if you're in the city of LA, SoCal, Edison for some areas. SoCal Gas for natural gas throughout Southern California. Call them at least 3 to 5 days before your move-in date. Have your closing documents handy. They'll ask for your new address and the date you want service to start. Water service varies by city. In West Hills, it's typically LADWP. Call your provider to transfer account. Internet and cable, this one always takes longer than you expected, especially in new areas. Call your provider, Spectrum, AT&T, or whoever services that area at least 1 to 2 weeks before move-in date. Schedule your installation appointment early. Pro tip, keep a folder, physical or digital, with all your utility account numbers, old school, provider names, contact information. You'll need this more than you think. Number 3, understanding your HOA. If your new home is part of a homeowners association, and many homes in our area are, this section is really important. First, let me explain what an HOA actually does. The HOA manages and maintains the common areas of your community. Things like landscaping, pools, clubhouses, security gates, exterior maintenance, if it's a condo or townhome, and sometimes even your roof and exterior paint. In exchange for this, you pay a monthly HOA fee, and in the valley and surrounding areas, HOA fees typically range from $100 a month or up to $1,000 per month for a luxury gated community with extensive amenities. Here's what you need to do right away. Step 1, contact the HOA management. Let them know you're the new owner and get yourself set up in their system. You'll need to provide a copy of your grant deed or closing disclosure as proof of ownership. Step 2, set up automatic payments. HOA fees are due monthly, and missing payments can result in late fees and even liens on your property. Set up auto pay immediately. Number 3, read the CC&Rs. I know nobody wants to read 40 pages of rules, but the CC&Rs, covenant, conditions, and restrictions, tell you exactly what you can and cannot do with your property. Can you park an RV in the driveway? Can you paint your front door a different color? Can you run a business from home? These rules vary widely by community and you need to know them. Number 4, attend HOA meetings. This is optional but highly recommended, especially in your first year. It gives you a voice in your community and keeps you informed about any upcoming special assessments or major expenses. What is a special assessment? A special assessment is an additional fee that the HOA charges all homeowners on top of regular dues to cover unexpected major expenses. Say the community pool needs a complete renovation or the roof of a common building needs replacing. If the HOA reserve fund doesn't cover it, they can charge every homeowner a lump sum. I've seen special assessments range from a few $100s to thousands of dollars. This is why it's so important to review HOA financials before you buy, which we covered back in part 4. Property taxes, number 4. This is one of the most important sections of today's video because property taxes catch so many first-time buyers completely off guard. Let me explain how property taxes work in California. How are they calculated? In California, your property tax is based on your assessed value, which is typically your purchase price. The base property tax rate in California is 1% of the assessed value, but with additional local assessments, the effective rate typically comes out to 1.1% to 1.25% of your purchase price per year. So let me put that in real numbers. If you bought a home, let's say in West Hills for $1 million, base property tax is $10,000 per year with additional assessments, $11,000 to $12,500 per year. That's roughly $917 to $1,042 per month. Make sure that number is factored into your monthly budget. When are they due? California property taxes are paid in 2 installments. First installment due November 1st, delinquent after December 10th. Second installment due February 1st, delinquent after April 10th. Mark these dates on your calendar right now. Missing them results in a 10% penalty, and if you're significantly late, it can result in a tax lien on your property. Do I need to do anything to set this up? If you have a mortgage, I'm sure your lender collects property taxes monthly through what's called an impound account, sometimes also referred to as an escrow account by the lender. A portion of your monthly mortgage payment goes into this account and your lender pays your property taxes to the county on your behalf twice a year. If you paid cash or your loan doesn't have an impound account, you'll need to pay property taxes directly. The county will mail you a bill, but don't wait for the bill. Look up your account at your county assessor's website and make sure your information is correct. Prop 13, the most important California property tax law. Under Proposition 13, your assessed value can only increase by a maximum of 2% per year, regardless of how much the market goes up. This is an incredible protection for California homeowners. It means your property taxes are predictable and stable over time. Homeowners exemption. If this is your primary residence, make sure you file for the California homeowners exemption. It reduces your assessed value by $7,000, saving you about $70 to $100 per year in property taxes. It's not a big amount, but it's free money. Just fill out the form on your county assessor's website. Number 5, homeowners insurance. Your lender required you to get homeowners insurance before closing, so you should already have a policy in place. But now that you own the home, here's what you need to know. Review your policy carefully. Make sure you understand what is covered and what is not covered, your deductible amount, your dwelling coverage. Is it enough to rebuild the home from scratch if needed? Your personal property coverage, your liability coverage, earthquake insurance. Standard homeowners insurance in California does not cover earthquakes, period. Given that we live in Southern California, earthquake coverage is something you should seriously consider. The California Earthquake Authority, CEA, offers policies specifically for this. Talk to your insurance agent about whether it makes sense for your situation. Fire insurance. With the wildfires we've seen in Southern California, make sure your policy covers wildfire damage. Some properties in high fire risk zones have had trouble getting coverage, so review this carefully. Reassess your coverage annually. As your home appreciates in value, make sure your coverage keeps up. What it would cost to rebuild your home today may be very different from when you first got the policy. Moving in. Now the fun part. Actually moving in. Here are my tips to making as smooth as possible. Hire professional movers and book them early. Good movers in LA area book up weeks in advance, especially on weekends. Get at least 3 quotes and check reviews carefully. Update your address everywhere. U.S. Postal Service, your employer, your bank and credit cards, the DMV. California requires you to update your address within 10 days of moving. Social Security Administration, your doctor, dentist, and other healthcare providers. Subscriptions and online accounts. Finally, friends and family. Deep clean before you move furniture in. It is so much easier to clean an empty home than a furnished one. Hire a professional cleaning service to do a full deep clean before your boxes arrive. Set up your kitchen and bedroom first. Trust me on this. Everything else can wait, but if you have a functional kitchen and a comfortable bed, you can survive the chaos of unpacking everything else over time. Home maintenance, your new responsibility. Here's something nobody tells first-time homebuyers. When you own a home, you are the landlord now. There's no property manager to call when something breaks. It's on you. The best thing you can do is be proactive rather than reactive. Here's a simple seasonal maintenance checklist to keep your home in top condition. Every month, check and replace HVAC filters, test smoke detectors and carbon monoxide alarms, check for any water leaks under the sinks. Every 6 months, service your HVAC system, clean gutters and downspouts, test the garage door, flush your water heater. Every year, have your roof inspected. Check weather stripping on doors and windows. Service your fireplace and chimney. Have your electrical panels checked if it's old. Set aside a home maintenance fund. The general rule of thumb is to budget 1% of your home's value per year for maintenance and repairs. On a $1 million home, that's $10,000 per year. I know that sounds like a lot, but trust me, when your HVAC goes out in August in the San Fernando Valley, you'll be glad you have it. Number 8, building your equity. Now here's the exciting part. From the moment you closed, you started building wealth. Every single month, you're doing 3 things. Paying down your mortgage. Every payment you make reduces your loan balance. In the early years, most of your payment goes toward interest, but over time, more and more goes toward principal. Every dollar of principal you pay down is equity in your pocket. Number 2, appreciating in value. Historically, Southern California real estate appreciates at about 5 to 7% per year over the long term. That appreciation happens whether you're paying attention to it or not. Your home is working for you 24 hours a day. Number 3, benefiting from inflation. Your mortgage payment stays the same, but everything around it gets more expensive over time. In 10 years, your fixed mortgage payment will feel like a bargain compared to what rents will be. This is one of the most powerful wealth-building advantages of home ownership. So that's everything that happens after closing, the real stuff nobody tells you about. Quick recap. Change your locks day 1. Set up all utilities before you move in. Understand your HOA rules and fees. Know your property tax due dates, November and February. Review your homeowner's insurance. Be proactive about home maintenance. Start building that equity from day 1. Homeownership is one of the greatest gifts you can give yourself and your family. Yes, there's more responsibility, but the rewards are extraordinary. If you're a first-time homebuyer in West Hills, Calabasas, Woodland Hills, anywhere in the San Fernando Valley, or just anywhere, I'm here for you every step of the way. Not just through closing, but after too. Call or text me at 818-371-2656. Give this video a thumbs up if it helped. Subscribe to my channel and make sure you watch all 5 parts of this first-time homebuyer series. Everything you need is linked below. I'm Rosi Agopian, and I'll see you in the next one. Take care.